optimistic or not, I'm going to just choose to believe that you are.
No, that really is how I I mean, I don't keep track of which one it is. One says YouTube. That's the one I use for YouTube.
I use the one that says YouTube for YouTube. That seems very logical.
Yeah. That's...
All right. Now we're actually live. For those that are just logging in, see, the other weird thing it does, like, let me just tell you my troubles for a second, because that's how we should start off. It's so freaking complicated to get streaming on YouTube through Zoom. I hate it. And then when it does work, I start hearing myself talk back through my ears. So I start feeling I have multiple personalities or something. Like, there's this whole conversation going on in my head.
Josh, you're driving me nuts trying to resize this window here. Double click at the top in the blank area.
No.
There you go. Yeah.
My life has been changed. All right.
That's what I'm here
and
for.
That, my friends, is your daily stock trading tip of the day. If you double click, wait a minute. Oh my gosh. All right. Welcome, everybody. We've just been having a ball in here, and I'll repeat this. I'm sorry for the people that are live on Zoom, but thank you guys for meeting at the bottom of the hour. For the YouTube friends, it's 30 minutes early. For the Zoom friends, it's 30 minutes late. And unintentionally, I had a conflict. I was teaching a class until just about 10 minutes ago. And so we've mashed up the live group coaching with the live YouTube show, and they're going to run synchronous paths here for the next little while, and maybe indefinitely. What that means is, if you're on Zoom, if you're a TSU customer, we want to hear from you. We want to answer your questions. We want to serve you and make sure that you're putting fat stacks of cash in your jeans. If you're a YouTube fan, you're welcome to become a TradeSmart customer. We would love that. But we're going to bias their questions first, and then we'll pop over to YouTube and engage there. I don't perceive it being a problem, because typically it's like pulling teeth to get people to ask questions. They're just here for the party, I guess. I don't know. So anyway, how do I fix that, Chris? If I
that's user error.
Yeah, 100% user error. All right. Well, I was teaching over the class, so we didn't really coordinate exactly what we're going to talk about here. So I'm going to just jump in and talk about the stock market, and Scott can tell me all the reasons that I'm wrong in the way that I'm seeing the stock market. And Chris will play referee between the two of us here. But I'm actually in some short trades right now on SPY, or actually ticker symbol SH. I jumped into that yesterday down around here, and it's definitely moving in my favor so far. I'm curious to see where it goes. It ended up consolidating a little bit more than expected, but as far as I'm concerned, in my little limited brain space, I just keep seeing the market make lower peaks every step of the way down here. And I was kind of waiting for this to hit resistance. I wish I would have jumped in back here. I had the idea of jumping in back there, and just didn't pull the trigger until a couple days later here. So we're currently trading on down bearish, and breaking through this recent consolidation right there. It was a big deal. It looks a little bit less of a big deal now that we've traded up, although the candlestick is falling as we speak. I noticed that on a 30-minute, and I know Scott pointed that out as well. I don't forget it was in the Discord channel or here live, but just talking about looking at all this consolidation in through here. But I was keeping an eye on this zone, and breaking through that was a good sign this morning. We'll see if we get back down there and break down through it. But I would say that the chances are fairly substantial that we would have my tablet turn off. That's a substantial chance. The chances are fairly substantial that we will come back down and test this this support zone. Whether we bounce there and go up or we continue on down, I don't know. I'm really of the mindset right now. I don't see anything that would suggest to me that we have broken out of this bearish framework. And that's not based on news. That's just based on the momentum of the market right now. And in combating the inflation numbers, I think that we're probably going to hear in the next couple of weeks that we're in a confirmed recession, which is like going to the doctor with a torn meniscus and they say, you have a torn meniscus. And you're like, I'm so glad you said that because it's been really painful. And I kind of feel like when they say it's a recession, everybody's going to be like, I'm so glad you said that because it's been really painful. Amen. Price of eggs has gone up 100%, making the best investment you could have had in 2022 being a chicken. Did you ever think you'd live to see that day, Scott?
No.
Buy a chicken and get rich. I mean, anyway. So, generally I'm bearish on the market right now. I do want to say, proud dad moment. I think I got a slide here. Hold on. I think I got a slide. Josiah funded his first trading account, real money trading account. He's been virtual trading here. Let me find this. This is in the Traders Advantage Mastermind last night. So this was his picture after his very first trade. It netted him 1 R. He saved up, put $1,000 in the trading account. So he's got a $10 R, and he made $9.39 on his trade and exited Nike. So number 1 and done in the books. He should quit right now. He could have a perfect win-loss ratio for the rest of his life. So anyway, what you got, Scott?
I love it. So reminder to everybody, there's a few things happening this week. Friday we will have options expiration. So a lot of the behavior you're seeing this week is really running into that aspect of it. Of course, now you got Fed heads talking about 75 basis points to 100 basis points being rumored out there.
I hadn't heard that. 100?
Oh yeah, 100. Yeah.
Wow.
It's getting a lot more play. And then the counter range just winds up on the 15th, which is tomorrow. It's also my son's 19th birthday. So it's a good day. So we're doing lunch before his friends take him out tomorrow night. So I bring this up because on top of that, we sort of have an earnings kick out. In these next 2.5, 3 weeks, guys, we'll get the bulk of the earnings out of the way. And I've had people say, Scott, why are we seeing volatility, or what are you seeing with volatility? I don't look at this as negative or positive. I just see it as opportunistic. We do have unfilled gaps. You now have 4 of them left on the screen. We had filled 2 or 3 prior in this group, but there's still 4 very clearly defined unfilled gaps. And those will create opportunities once this market starts to move whatever way it wants to go. So just heads up there as we move forward in time. But tomorrow, we'll do a coffee and cash in the morning. Now that we've started the this 5th traction group, and I bring this up because as we go into tomorrow, I tell people when you get to options expiration Fridays, don't be of the mindset where it has to be a trend day. A lot of times they'll take them up just enough to make you think they're going to break out, and then they drop them and they go down. They try to break them out downside and they bring them right. It's just this game. And that's kind of this whole week's kind of been. It's just very rangy and all that. And we're still stuck in a more macro range, as Josh has already pointed out to you guys, but you do have some unfilled gaps in the short-term charts. If you really look at the bigger pattern of what you're in, if I can do this or not. If you think about the move down right here, just the bigger move, right? And then you start to look at this in a compression pattern, okay? The textbook would tell you in this environment here, at some point, depending on whenever we put a low in, if it's a higher low, you have a compression pattern. The rule book would say we go lower. Doesn't mean we will, but that's what the rule book would say that you're looking at as far as the textbooks of the markets. We'll see if that plays out. These gap downs are getting bought up, and when they start gapping stocks, we talk about this exhaustively in traction. They start gapping around, guys. They're really trying to turn a market. So I know it's summertime. I don't know if Raymond's in here right now or not. I didn't look to see, but we've talked about Monday mornings and Friday afternoons in summertime until we get kind of through Labor Day, guys. Expect those bookends of the markets to be lighter on volume. Hopefully Tuesday, Wednesday, Thursday, a little more normal. We get through summertime and things will pick back up. I am seeing traders where they are steering clear of trading right now because they don't like the volatility. I think volatility is your friend. I don't think it's your enemy. I think it's the ability to get adapted to the idea of trading with volatility and just taking your R's as they come in, taking your targets like we talk about. So I don't see it as a negative, and trying to go for, base hits or stealing second right now. Like, you're just trying to get what the market will give you unless you have a longer term time frame. It just depends on who you are and how you trade. So that's kind of what we've been talking about this week, and just an overview. But remember, I've said this like 60 times this week: options expirations on Friday. Stop thinking it has to keep trending a certain way and they're not going to play games with you. I'm seeing people get outside of the TSU group. I'm seeing some of my professionals that are just, they're holding for some idealized level, and I respect what they're trying to do, but they're missing out on some good trades because they're just trying to get a little too cutesy in this market, and they're leaving big numbers on the table because of indiscretionary counts. And I just, again, that's my pet peeve, but that's me. Anyway, that's kind of what I'm looking at right now.
Talk to me for a minute about gaps and the significance of the elapsed time since the gap occurred. Does it make it more significant or less significant?
So I'll give you a couple examples with this. I look at gaps not from the individual stocks. Everybody understands this in case you're new to hear me talk about gaps. I care about gaps in the major averages, the NASDAQ, the S&P, the small caps, the Dow, things like that. The reason I mention this is it is not less significant because it doesn't come back to it. What is a little more concerning, imagine we go forward in time. This is what happened, by the way, years ago. We came out of a basing structure running out of basically from the dot-com bottom, and China started buying up all the assets, right? Well, on that journey up from basically the 2003 lows up to the 2009 highs, there were gaps left. So imagine this is the base, we gapped above it, and we just kept going. And then 3-4 years later, you fill the gap. Now, somebody says, oh, that's a waste of time. It's not. I have people arguing with me about filling gaps longer term, and I'm answering Josh's question in two ways, guys. The reason I'm bringing this up is the gap on a major average going back 7 years ago is just as significant as any gap in front of you right now on a major average. They don't like to leave them unfilled. So imagine we do get into a really severe, almost more deep recession, almost like concern of depression kind of mentality for a second. And there are unfilled gaps back below the market here. And I don't mean like this screen, I'm talking way on deep back down. Those become longer term bullseye for the markets. I proved it in 07, 09 when the collapse came through that. We went back down to 667, the S&P. People say, well, that's so extreme. It may be in your head until you realize if you're positioned heavily short in the market, these become really solid bullseye targets to start focusing on. In the shorter run, to answer Josh's question on the short term, none of these are more significant or less significant. It really is, where are you relative to that? And these become great places to then put targets against. And again, in order to get out of this bigger range, when we do, there's a short-term one right here, clearly, right? The very bottom one. The one that intrigues me is this one up here. Because in order to get to that, what will we have to do from down here to get to there? And it might be, we don't see it for 18 months, but it's one of those areas that will come back and be attacked one day. And now imagine if the S&P was 18% lower from here, and it does really start to bottom out at some point, just in theory. Now all of a sudden you've got a place on your chart to go at. Pretend these three got filled, but this one never did. And now we're 20%, 18% lower down the road, 15% lower. Now on the way back up, that right there is going to have Scott's attention all day long on a much longer term play. Now that's more of an investment mindset than a trader's mindset. I understand that. I also don't know we won't come back and fill that before then. We never know, but there are unfilled gaps on longer term charts lower from here. And it's a big deal. And some of my closest friends in the industry argued with me through this in 07, 09, argued the point. And I said, I'm telling y'all, don't. They don't like it. On equities, do not confuse this with equity individual stocks. It's not the same animal. Both the major averages, there's a reason those were left unfilled, and it's amazing to watch them get filled. And sometimes it is years later. I'm being redundant for a reason, because people are going to dismiss this, and then eventually the market's going to be back at a certain level and be like, crap, he was right. It's not me. I'm trying to teach y'all how they look at the market. So I hope that's helpful. I hope that answered the question. I know it's a little long-winded, but
do you find larger gaps to be more significant, like that unfilled one back on the left? I mean, seems like, it takes a lot more energy to fill that gap than a small one, right?
And it would, but it depends on what the structure is that you base out before you get there. And so the beauty of this is, can you imagine? I mean, you know how Josh likes his R's. I'm playing with him. In all seriousness, if there's this unfilled hole here,
I think you meant amazing R's.
I know how much I praise you. I mean, I'm good for your ego. We know that. You tell Jen. So, but this becomes
so
all seriously. It really becomes a very easy. You want to go back to lower that bar. Now, I used to teach a concept called waterfalls, rock walls. The whole idea was a waterfall effect of a bunch of red bars or a bunch of green bars simultaneously. You kind of see that right here. So when price rolls back over and falls down, those long elongated bars, guys, a lot of powerful runs. Because, oh, it can't keep going. It might bob a little bit, but now I'm starting to not only fill this gap, now I'm starting to think about back to that low structure right there. Most people ignore the gap. These are layup trades. For Josh, this would be a layup trade, like truly a layup if the stock or whatever you're looking at does break out and starts to go that way. Let's see if I have a chart on this. Just indulge me, guys, since we're right here. Just 1 second. Ooh, that's not the right one. This one is. Hang on. Hang on. Where did I put you? Right here. Here's the monthly. All right, so let me go to the weekly. Okay. So when you start looking back in history, again, you don't like this gap right here. Imagine when Josh was looking, back at the end of the COVID collapse. See that unfilled gap right there? Guys, when if you're thinking about this from a fib retracement, just going back to half, a third, 3/4, however you want to think about this, that becomes a bogey right there. What is that worth to your pocketbook? And again, say, oh, well, that was, guess what else? See this unfilled gap here? I know this because I put it for one of the funds I work with. That 401, well, all of a sudden you start to see this pattern against the high. What's your bogey right there? That 400, 401 number, right? The high of that bar back on 4221. Then you start looking, where else you have unfilled gap? Well, back down here, this got filled pretty quickly. But then you start digging into this. Now I'm looking at what's the weekly? Let's go to a daily and bring this back. We can see the unfilled gaps here, but go further back in history to places we haven't been. What do you think that gap's worth right there? Just think about that. Think about what I've showed you and think about this gap right back to there at the 332 number. How about the gap back here? You'll see this over and over, and you still have a little bit unfilled gaps. There's one right here, the 338 number. This is going back to when? 11.3. You start watching for these things, and down the road at some point, these things start to pay off. But again, it assumes that you're looking at something more macro down the road to get to. So that's why I stress this to people, especially longer term players in the marketplace, and what's the value of that? Again, you've got it right down here. There's that 338 number, whatever it is. You've got gaps right here unfilled. So make the assumption for a second that Josh is completely correct and we continue to move lower. Now go look left. Where are the unfilled gaps? They'll hunt these things down. That doesn't mean it's on this cycle of time. So I know that's a lot of information. Where are your unfilled gaps? Bring a rectangle across the screen. Don't ignore it down the road. Just look at it, and you'll see it on dailies and weeklies. If it's, and this is going to Chris's comment or question, so to speak, if I have it on a weekly or a monthly, it's going to get my attention even at a bigger level, because we know the weekly close is the most important point on almost any data point on a chart. If that's the case here, and I have a weekly gap where I didn't close that gap in history, I need to know that information. Because if I do get a bias move down at some point, this becomes interesting. Just like you have it right here. You had a daily gap, a weekly gap. How easy is that to target back on the way up? If that's all you get, even if you're not catching the very bottom here, I'm just talking this part, and you're coming back to that, what's that worth to your pocketbook? That's why I call these gimmies or layups when you get close to them. Anyway, I hope that's helpful.
Sorry, Rebecca's texting me a question. I was responding to her. What questions do you guys have that are here? We've actually got a pretty good group in the session. Where did my peeps go? Freaking Zoom. If you click the wrong thing, you guys disappear on me. There you are. Got Andy, James, Kamani, Sorties, and Todd in here. What stocks are you guys looking at?
Well, people are typing in questions and stuff. I do want to mention, since we were talking about option expiration this week and increased volatility and all of that, I've pretty much switched my portfolio over the last month or so to doing mostly just cash flow trades, doing credit spreads. And that's been working out for me a lot better than directional trades have been. So I've still got like my overall hedges on and everything. Like I've still got SPY puts and all of that, and I'm still doing calendar spreads on that. But the cash flow trades have definitely been a lot more consistent in this environment.
Mm.
One more note to add to this: UVXY. Everybody knows I kind of post this chart in Discord and everything else. I mentioned just briefly because this is that. If we can't get back through the 16s or even the mid 15s here, I just, we're not in Armageddon at that point. I always remind people of this because that's when things get really interesting. If you'll notice, we just can't get through these and follow through. And so I know how the market feels lately, but I think more of the action this week is much more focused on earnings and options related behavior than anything else, including the Fed at the moment. I really do, just because the way the news flow is coming out. For what it's worth.
I will predict. I don't know when it's going to happen, and it would take it's just a very difficult thing to do. But I do know when the news is the loudest and most desperate, that's when the bottom's going to show up. Mm-hmm. So, I don't know if this is that. It's just impossible to say until hindsight, really. But when you start seeing the market print higher highs and higher lows, that'll be your clue. Somebody asked me about dollar cost averaging in the last class I was just teaching, and I was thinking, it always cracks me up. Like, why? Like, I understand the principle. Like, just keep buying as it goes down, but why don't you wait until it stops going down to start buying again? Like, I've never understood that exactly. I feel like it's the thing that institutions tell their clients to make them feel better.
That's what I was going to say. I'm nearly certain that entire dollar cost averaging thing is just a marketing ploy by Wall Street.
Mm-hmm.
Give us more of your money, but everything's going down. No, it's okay. Just keep giving us your money. It'll be fine. Trust me.
Nothing's on fire. That meme of the dumpster fire. What problem?
Tell you something else. One of my guys in Traction has. I always talk about this over the years with where the economy is, and I think I may have mentioned it through our lives in the past. If you know somebody who repos for a living, have a friend that knows a friend, reach out to the repo man. Promise you, they'll know. And what's interesting is what I was told by my friend in Traction was repos, they're, and then now it's starting to make headlines other places about what's happening with repos. And it's not just cars, it's with boats, it's with homes, it's with everything is starting to do this. Just again, looking for cracks in the foundations, guys. I mean, I get it's an ancillary piece of data to a lot of you, but I do a lot of channel checking because, as I've told people, we get really engulfed in our charts. But the thing that's making these charts do this is really based a lot of times on the reality around us in business. And so it is interesting to see that. And I've learned this over the years from knowing repo men. And they'll always tell me, we know before everybody else does what's happening to the economy. That's how we know. My other friend does their basket, and I think Raymond does this as well. What is a basket of goods you can go to the store and purchase? I think, Josh, you may have talked about this in the past. She's always told me she knows when things are going to change by the price of eggs and the price of milk in the store. And it's usually the eggs are the first indicator the recession's coming. She said she's known it her whole life. I think she learned by somebody in her family. Yeah, it's eggs is like her biggest key. It's like a basket of eggs, milk, cheese, and I think bacon or something like that. It's one of those basic commodities type thing, and you can tell. Anyway.
Shorty says CLF 52-week low due to credit spread now. Are you thinking like a bull put spread? Is that what you're thinking on that? I'm looking at CLF and it does not look bullish to me.
Yeah, CLF's been having a rough time lately.
Or are you thinking a bear call spread? The repo thing is interesting to me, Scott. so like, are they saying they're seeing their repos are escalating? And is that like, I wonder how much that leads or lags kind of the rest of the economic news?
Leads. It normally leads, is my impression from what I've learned over the years. It's typically a leading indicator, and you won't see that put out there. I've learned it just because I learned this back in 07, 09 is when I actually got a really good feel for this. I got to know a repo man really well. And he said, Scott, I've been doing this like 30 years. And my impression was it typically leads, or it's enough of a lead that people need to pay attention. And then we see if other data that we're getting reported to by the mainstream media really matches that up. And that's not questioning the repo person, because you could have certain issues. Because we know, I mean, you understand this better than me. Y'all, a lot of you realize that real estate is a local thing. But once you start seeing cars and boats and motorcycles, whatever's in this list of things, people's second homes coming in and being taken over, it's a lot of times you're starting to see other things crack in the system, not just a local California real estate situation or something in the South. And the housing doesn't capture my attention as much as when we start looking at cars or boats, things of that nature. And then you start hearing it's at the higher end of the wealth in the country, which means people are overextended. And that starts to get my attention, because now
the interest rates are going to start catching them. And if it's revolving interest, or, anything that's not fixed, it's bad news.
Yep.
I have a funny story with repo. It's probably not one that should be shared, but all 6 people on the stream right now. So I bought my dad, it's a little bit of a longer story. We were working on a property, and we had actually borrowed some equipment, and we're just doing some dirt work. And my dad got into a situation and flipped this piece of equipment multiple times. Honestly, should have killed him. It was like miraculous that he didn't die. Truly miraculous. Didn't even get hurt, like walked away from it. So fast forward, first of all, we had to replace the equipment that we destroyed. And then when he turned 60, it would have been his 60th birthday. When he turned 60, I was like, I'm going to buy him a tractor. He's always wanted this 65 horsepower John Deere tractor. It was about a $50,000 tractor when it was all said and done, with the cab and the air conditioning. And I'm like, hey, at least this time, if you flip it, you'll turn into like a smoothie in the middle of this cab instead of getting ejected from it. So I bought this for him, and John Deere had 0% interest. I'm like, well, heck, if you're like, I don't know. I don't like payment plans, but if people are going to give me money for free, I'm like, yes, please. So 0% interest, I'm a fan. Don't overextend yourself. I mean, that's not financial advice. That's just me. And so anyway, the very last payment, something got confused, and they didn't send me like the email or whatever, the automation, whatever, something happened. It's very last payment. It didn't go through. And I kept getting this call from like John Deere Financial. I'm like, what the heck? Like, scammer, let's go away. Kept ignoring the call. Well, long story short, repo people showed up to get the tractor. And I'm like, wait a minute. It was like an $800 a month payment. I'm like, can I just give you the cash? Like, what's going on here? I was so embarrassed. I wasn't even home. Like, Jen calls me. She's like, there's a couple guys here saying they're going to repo pop this tractor. I'm like, oh. And like, you guys that know me, like, embarrassment is one of my strongest away values. And it takes a lot to embarrass me, but that did it. And so anyway, the story doesn't end there. So I tell the guy, I'm like, look, this is stupid. Like, to load the tractor up and take it, it's literally the last payment. It's like, can I just give you the cash? Like, can we be done? And he's like, oh yeah, like, that's fine. So I give this guy cash, which probably in hindsight was a terrible idea. But I just wanted to make the pain stop, right? So I give him the cash, it goes away. And then I call up, that was on like a Saturday. I call up John Deere first thing Monday morning and explain what happened. And they were like, they're not allowed to take cash. So then they didn't want to believe me that I had paid this guy cash. Of course, he didn't give me a receipt or anything. So I ended up paying 2 final payments on the thing. I did avoid the embarrassment of the tractor getting towed down the road with his
I love
Anyway.
that. You're just like, hey, can I give you cash? And the guy's like, yeah, sure. We'll
Yeah,
count
the
towards your
guy's like,
payment, but yeah, you can give me cash.
good as cash. He drove away. I think he did get in trouble because they knew who it was, and I don't know whatever came of it. But maybe he didn't. Like, it's my word against his. Like, he probably got in trouble for not picking it up. I don't know. Yeah, true story. So I don't know. That's very. I get nervous when I'm in a big group and I'm like buying dinner and they take my credit card, like it's hit the limit for the day or something, and they have to come back and be like, sorry, Mr. Hester, your card was declined. Like, I don't know why that stuff freaks me out. I'd
You
rather
only
just
have
pay
one
cash.
card.
No, I have lots of cards, but
Okay.
then you start like the card shuffle and you're like, what the heck? But that's all PTSD from 2007. 2007 was a bad year, and then 2008 was a great year. So anyway, I just shared that little longer story in this other group. See, yeah, Repo, is it a movie or show stories? There's a like Repo, Airplane Repo. That's what it was called.
Mm-hmm.
And we had to stop watching it because the language was so bad. The kids were like, they named them like Language Larry and I forget. Anyway, but I'm like, that's the coolest job in the world. You're literally like going and stealing an airplane as a repo man. Like, you got to break into the airport, you got to break into the hangar, get the airplane out. I mean, I'm sure it's Hollywood, but
have you seen, I know we're way off track, but have y'all seen the sophistication of what repo people have when it comes to cars and the drones they use? It's insane the level of game they play at now. It's not like it used to be. I mean, the more sophisticated ones I've seen, that's when you see their hoods and it looks like something out of, I don't know, Knight Rider, Darth Vader. It's all this stuff on top of their hood. That's your repo guys. And they get their drones awesome. And they get behind the gated communities and find out. It's slick. That's a whole different animal. But
yeah, the high-end repo world is interesting.
So you'll appreciate this chart. This is what I'm shown, tracks and everything else. This has all been forecasted out going way back up here. So I had made some quick additions to this here in the more recent weeks. So
that looks like a game that my kids have with like a bunch of colored sticks and they stack them on top of each other.
The beauty of this one, until you get out of this right here, the overall trend doesn't change. That yellow line's been forecast. We talked about actually in class here this week. I said, if we lose this one, then you're going to be looking for that in your next level. And this morning I've got a fund and I was dealing with, and they're like being a little cutesy on the entry. And I said, we're there. Like, that's it right there. Sure enough, we're up and out. So again, all that's forecasted out. None of this is in hindsight. People have seen this chart. I've posted Discord not hiding anything. But if you notice, you've got the big white channel and the shorter term channel. If you'll look at the yellows in here, forgive me for saying it like that. It's been a lot of time on. So you're stuck inside that. Now we could subdivide this clearly. If I were to take this and subdivide and just put it roughly in the middle here, you would, that's not right, a little more in here. Roughly up midpoint, you can see all the reactions going on, that confluence of information. So if you don't want that, then narrow it back down. I only point this out, guys, because of where the market is. And until we deal with this, both that white line or this yellow channel, nothing really does change right now. We're just kind of churning back and forth. And some people are annoyed because the market's not trending hard up or down. It's just gap, gap, gap. Be patient. Don't force trades. Frame them, take your trade, take what it gives you, go get your R, get your 100% win ratio like Josh, and be done. Like, seriously, there we go.
I had one losing trade so far in July, and I'm not proud of myself.
Why did
it
you
was
have
the morning
Your
glory.
12-year-old has a better win rate than you?
Read between the lines, Chris.
Oh, wow. Where's Jen? Let me get her on this.
This is a child-friendly show. We have to be careful. Oh, yes. Josiah has a better win-loss ratio than me. Jerk kid.
Chris, I
that
love
was
it.
good. That was good, Chris.
Sorties get him. All right, back on point. Sorry, guys.
I don't. Oh, so here's what's funny. That finally made its way to YouTube. So I'm watching the YouTube stats, and I can see that little outburst. That's very inappropriate. Sorties, I don't understand your question. I don't know if there's like something getting lost in you know how fonts do that weird thing. You said if the weekly British pound, the daily have a gap in the same region, is that a good place? Maybe you understand, Scott, because I know sorties is in traction. Otherwise, you're gonna have to decode that one for me. Give me the decoder ring.
I'm reading. Hang on one second, guys. Yes, sorties. Yes. If you have a gap in the same region, absolutely, because there's a confluence there. Absolutely, you should do that. Realize, guys, and now that Josh has just brought this to our attention and everything, and I'm just looking at this. Remember, we don't open or close markets, the pros do. The pros will always close. And so if you have gaps that are well defined, you don't want to ignore them. In fact, y'all may remember we did probably 10 minutes in this where I took and I drew trend lines on daily charts where you had gaps and I connected the gaps. And I showed you guys the value of that. Those gaps are created for several reasons, but you don't ever want to ignore gaps, especially on major pairs, major markets, major indices, because they're leaving. And even with gaps in individual stocks, if you start connecting the gaps with trend lines, you guys will be amazed at what's generating those without going down the rabbit hole. But mark trend lines through them. You'll see them resonate later on. That's why I did that in one of our YouTube lives we did to demonstrate that point. So absolutely, sorties, yes.
Nvidia is another one that somebody wanted to look at. I'm happy to grab it, but I know that's a favorite of yours, Scott.
Yeah, we can go to Nvidia. Let me jump just for a second. Not that one, Scott. Let's go to here just for 1 second. Nvidia is we know it's in a bear market by every metric out there. I know they had earnings. I don't know, maybe 6 weeks ago. I don't know, somewhere in there. It's been out. Let me see, just quick question. Hang on 1 second. So with Nvidia, was there a specific question to it, Josh, as far as just an overview of the chart itself?
It's just the famous, can we take a look?
Yeah. So we know she's in a bear market. I was curious if TSM, when it reported earnings this morning, would have any real impact on Nvidia. I mean, I know the stock's up this morning. The way this thing is trying to, I say, shape up, so to speak, it's not like we're accelerating, guys. We're really not. And if you start to look left at this chart, you'll see where your support is all day long. So this gives you that place where they really took this and broke this out from the past. So the buyers, the institutions are going to be lined up inside of here. So you might have some room down into what? The 125, 126, the 136 of this. But again, she's starting to dagger. What does dagger mean, Scott? So let's talk about this just briefly. When you start to dagger, it's going to have this kind of feel to it. Come on, Scott, do a better job, bud. Sorry, y'all. Hang on 1 second. When it starts to dagger, here's not a play note, are you? It's going to start to have that pinball flipper type look like this. A lot of times what you'll see when you get that kind of look, especially after the decline you've had, they'll pop out, they'll pull back. Now, the only question if that pullback is that going to create your first wave coming back up or your second wave out of that coming higher? Or are they going to try to walk it over and take it down lower? Again, we have earnings season going on, all that. But this is not the first time you start to look at this, that this is getting tighter and tighter. And it's a classic example, again, of what you see when these things really start to what I call cone or dagger in like this. It's something I've taught for literally 2 decades now. Very, very normal pop out, pull back, and then try to figure out, can they walk it over? You're doing it again. So it's back to back to back. So in my vantage point, I have a client who is in a position continues to hold. I wish they would have gotten out up here, but actually a couple of clients, but that's just me. We talked about it there.
Wait, they're in a long position?
Unfortunately, yes.
I want to pull them.
It's just, they don't. There's a lot of conversation of why it's a core position. And anybody I work with on the hedge fund side, I always ask the question, is this a trade or is it a core? And I'll get pushback. Well, you don't know what's no, you know it's a core because you've done your R&D behind it. You guys know your fundamentals. You know why you're doing whatever you're going to do. And you're going to put this amount of capital over X period of time in the position. And they have a very strong feeling that Nvidia will be a leadership name going down the road. That doesn't mean buy, sell, hold, and go buy today. That's not what I'm saying. But I have a problem with it because we had a lot of conversations around up here at this point, and the reason I want to get out. I've talked about this exhaustively, actually, more than I should in Traction over time since then. But it's their money, their clientele, not mine. So again, you can see the longer term on this. This is not hard to figure out. This is a major institutional level of support. The question is, will it hold? Will something happen to earnings down the road? We'll wait and see. But for right now, the institutions are littered through this on this side of it. Let's see what they do with it and how it comes out of it. It would be interesting while we're on this note. If you guys have looked at the oil holders, I think Sorties is making the point with the crude oil. We've seen a massive just slashing of those prices, right? Things coming in. Is tech going to somehow turn up? Oh, it can't happen, Scott. Lots of investment capital. I know this firsthand in this country for the future. Well, that's not next quarter, Scott. That might take 2 years. I hear you loud and clear. But the market is looking for its next leadership. Is it going to be tech and continue to sell the commodity? So as tech goes higher, commodities get sold again. What is the new paradigm for the market besides, I'm going to shift gears just for a second here with this. Populate Humana. Long-term structure base right there. Boom. Again, maybe they go to 500 with it. Maybe it takes a measured move out of this. I'm not really the biggest fan of Humana as a trading vehicle, but it is one that is sitting up near those highs and watch the pullbacks. I'm not really turned on by the idea of a Humana, healthcare is the safety net. It's not volatility. You go look at biotechs, right? Where is the growth going to come from to help pull this market up? What sector is going to lead? And that's what is curious to me. And I think when you see this, for those of you who watch, Kramer or other people in the industry, they'll start to leak the names out because then people start coming behind them to help buy them up and get momentum behind them. You don't have bases in the market, or if you do, it's in safety names like a Humana. So I'm curious to see what the next sector leadership is going to be. And it might be a little meme sector as we go into the fall. That happens in the fall time. You'll start seeing these sub $10 stocks getting juiced from 5 and 7 up to $10, $12, $15 like that in a matter of days. And they typically do that every time we go out of late summer into early fall. So I hope that's helpful with these. I don't have a strong opinion about much of anything right now as far as like, hey, you've just got to follow this stock or whatever. Right now, it's trading, it's base hits, take your R's. You don't have great bases. Please stop trying to convince yourself that something has formed a great base if it hasn't formed a great base. That's just, it needs to be that way in your heads right now. Stop trying to fight the Fed. We know that on the way up, don't fight the Fed. On the way down, don't fight the Fed. You'll hear this mantra over and over if you start listening for it. Anyway, there's my 2 cents. Chris, your thoughts, Josh?
Well, speaking of the Fed, Sorties had asked about why there seems to be a lot of open interest on HYG puts. I think that makes a lot of sense. Now, I mean, first of all, when we're looking at open interest, we don't know whether it's long or short, but I would bet that it's probably long put positions on HYG. And that just goes back to what Scott brought up earlier, which is, if the Fed is looking at raising interest rates by 75 to 100 basis points sometime in the near future, well, HYG is the high yield bond ETF, right? So as bond yields rise, right, as interest rates go up, the value of those bonds go down. So if you're looking at HYG is tracking the value of those bonds, of those high yield bonds, which are junk bonds basically. And so as interest rates go up, the value of those bonds are going to go down. So if the Fed is saying that they're going to raise interest rates, then you can bet that the value of bonds are going to go down. And HYG is likely to go down more than high rated bonds, because high yield bonds are junk bonds, right? So we're talking like triple C to, what is it? I don't remember exactly the ratings, but it's not your AAA rated bonds, right? It's not your very good bonds. Those are going to be a little bit more stable. And then you've got your Bs and all those and double Bs. Then you get into your junk bonds, which is the high yield bonds. And so those generally pay more, but they're also a lot more volatile. So you've got a chance that those are more likely to move violently than like your AAA rated bonds.
Real quick, I just want to add one thing. You made me think of this. I don't know why it just did, but you did. We've talked about wave counts. I've done this before with you guys, but I just want to surface one quick thing. When I do wave counts, I just take the low, I look at the color bars. Okay, so we finally went green. Then you've got red, then green, then a red, then a green, then a red, then a green. So this is 5 waves. There's 1, there's 2, there's 3, there's 4, there's 5. 5 up, and you've had officially now on the way down 1, 2, 3 bars down. I don't know if the third wave's complete, but it's a standard 5 and 3. We're also the midpoint of a very long-term channel. And I go through this quite frequently. It feels like with everybody, just as a reminder of kind of where things are and the big picture here. I only stress this point because this is getting to that zone on the channel. And if you were to come in on deeper down, don't do that, Scott, right there, right back into say here, somewhere right in there, you're probably getting closer to 50% correction of your fib. So 2 points here, a little bit lower spot down here, longer term fib retracement right here. You're at the midpoint of a very long-term, well-defined monthly channel. And so this is just an area, do not be surprised if we do not, what I call undulate like a snake inside of this range, like any other fib zone that you consolidate in where you just kind of churn. You've already had a full deviation move from one end to the other here. It's a huge move. We know, we've seen that. We're, 20% down in a lot of places, and some things are down a whole lot more than that. It's perspective. You say, I just day trade. I don't care about that. Okay. But then your day trades are not extending like you want them to extend. You wonder why, because the smart money, if you will, is not pushing because they know we're sitting in this zone. None of you are going to escape that. The bigger opportunities when you see a 5 deviation drop is not because you just got lucky. It's because the market structure was there for it. This is why I harp on price and market structure all the time. Everybody in Traction Pro can tell you this. These are really important things. We just up in Traction Pro this morning that people have never seen before from what I gather from the commentary. So I'm bringing this to your attention because everybody wants the market to go somewhere, but the market is stuck in 5 o'clock traffic. And I know Josh loves fibs. So that's why I'm stressing this. I've been saying this since we've gotten this level. We're in that zone unless you can give me an outlier event to move the market. And if you do, okay, then the elevator goes down or it goes up. That's all it is. I hope that's helpful for everybody. But that's why I'm going to bring this up. I don't know, something, Chris, you just said made me think of this chart in the midst of that with the HYG, I guess.
Where are you seeing that fib zone? I'm drawing fibs on the monthly right now. Can you clarify what you're looking at?
Oh, yeah. Well, so if you treat this right here, so when I draw my channels, I create a fib zone on the slope around it. Everything I do, horizontally or slope, you create fib zones. Just like inside of here, that's fibs. Those 3 lines, that is your 38, your 50, 61H right there replicated. And the same things right here. That's your 50. And then, so that's a fib zone.
So you drew the 2 bottom lines and then projected 100% up to get that top line?
Yes.
And then subdivided with fibs?
Yes. And this is actually done from actually using 3 pivots. I'm just skipping the mid pivot, 1 to 3. And then I paralleled that and then just double it up. Now subdivide. And the outlier is nothing more than basically a fib off of that low and that high. And y'all guys can see how it's lined up. I have a whole course I actually teach on doing this logic where you skip a certain pivot. And so that's how, and this is a very long-term chart. And you guys can see quite clear it's done a really good job. I didn't curve fit this. Like I didn't go out and manufacture. I actually did this maybe on one of our YouTubes. Anyway, so that's why I'm showing it and you guys still see it resonating. But this is a fib zone. This is a consolidation zone. Why are people asking for acceleration? and they're wondering why we're getting beat around here. Now, again, we might have a gap down on some news, come right here, slide a little bit and come back up. But just like in any other fib zone, horizontally on a slope, you see it right here, how they churned, right? It wasn't a whole lot of, it just churned. Same thing through here. We spent time churning through there even. You can see it. It's just very long tails, shadows, wicks. Now you're here. But you're on the third wave down. You had 5 up and 3 down. I even made the point of telling people you're at the 5th wave up here against this. So it gives you a high point to work against. Now you middle of the range. This is why a lot of people are struggling getting their counts just chopped to death right now. So I don't know if that's helpful for everybody. If it is, always let me know and we can do more stuff like this. But that's what you're in that zone. Now you look at, we're consolidating on 60 minutes. We're just stuck. It's not the end of the world. The bigger question is, can we reverse from here? If you look at the market structure of this, guys, and you were to go look and think about this for a second, like I'm going to do this with Josh in real time. He doesn't know what's coming. I know he doesn't because we've never really gone through this. Okay. If I gave you this chart, I don't have drawing tools where I can do this. I just want to make this point really quick for everybody. I've hammered this at the traction group, and I just want to bring this up in the private groups I deal with. Josh, I'm being serious, guys. I'm not being cutesy with Josh right now. If I gave Josh this chart, and I know he loves fibs, and I'm not trying to trick him up, guys. I'm being really straight up.
It's not possible to trick me up.
Okay, pretend that this was a chart you and Josiah were looking at, Caden looking at, right? Would you tell them that chart is bearish or bullish? I'm talking about what I just drew the sign right there. Is that bullish or bearish in your head? Typically speaking, with the data you have, would you look as an opportunity to get long or get short from where you are right now?
I'd be looking long.
Okay. I am not even at 50% of this. I'm basically what? This is a zone where most people look to buy, is my point, but we're 20% down. Right? We're in a bear market. I'm not doing this to anybody up. I'm trying to get you to think about it. If I showed you a day trade chart, most of you go, man, I'm gonna get long this as a day trader. But yet the whole world's freaked out because, and I understand it, we're down 20+%. Some things are 40%, whatever. But if you're being honest with yourselves, would you buy that chart as a day trade? And most of you, I think you would agree, would say yes. Then what do you think is going through Wall Street's mind right here? Just think about it logically, in all fairness. Skip everything else, the media, the news, the hype, the Fed. That's where people get sucked into the whole psychology part, and they stop seeing the chart because we're down this much. But if I show you that and it was a day trade chart, you'd be saying, man, I'm going to get long. Then what are you thinking here? And I'm not asking anybody to answer that. I'm asking, when you're seeing stuff, to think about it. And the reverse is true. If we go, pretend that we bounce from here, where do you think we go to? Probably somewhere right about here. I'm just ballparking. I'm not trying to be penny perfect right now. Is it a valid statement? Most of you, as Josh said, he'd be looking along. I would as well. This is not a trick question. It is to force all of you to ask yourself the question, if you get away from all the media and the hype, but Scott, we're down 20%, NASDAQ's down, certain stocks are down. I understand all that. You've got to discount the future. How do you do that? Well, but if it was any other chart and you're a technical trader, what are you thinking in here? I'm not thinking Arby's. So it's a great way to counterbalance what we think in the midst of what is really doesn't look pretty in a lot of ways. So 5 waves up, 3 waves down, that's textbook. Look at where you're in your fibs. Now all of a sudden you're going to hate me because it's like, but I want it to go short. It's like, do y'all understand why I'm coming at you guys like this? Because if it was any other stock out there, you'd be looking as a day trader saying, dude, there's a long opportunity coming, not a short. So it's a fair game question. And that I don't want to get out of YouTube today and not have addressed that, to challenge you to think, as opposed to be, I hate to call it the sheep mentality, whatever. It's like, challenge yourself when you see big patterns or you hear the world's falling apart. Is it really? And don't take me to be bull or bear when I say this. I'm just trying to challenge you guys to think for yourself. That's it. I hope that's helpful. It's a different way of looking at things. So
it's interesting. Now you got me drawing fibs on a monthly chart.
Sorry, Josh.
And so here's the way that I would look at it.
You want your screen?
I'm going to steal my screen. It's the benefit of being the host.
I know.
This is the same chart that Scott was just looking at here, and the same range that he was looking at, and we'll say all the time, as long as we trade to or within, but not below the green box, we're technically still in a bullish framework, and we're just sitting right here on the top of the green box right now. So that's interesting. It's very interesting.
It challenges the mind. Now do this, Josh. Take that all the way back to the 09 low. And where did what fib do you think we got roughly right there?
It's probably whatever the inverse of the 786 is. I always forget. Mm-hmm. Is that the what is that? The
go up. I think it's a 7.8 you got up there.
Oh, 236, is that it?
Probably.
Nope.
Hold
on, I got this upside down. Hold on. 786. There's the 786.
Huh.
Another way you can get there is if we just did just subdivide it like that.
Huh. Interesting, huh? Just think about that from the 09 low. How bad really is this? I get the numbers, guys. Please don't think I don't. I'm just trying to challenge you. If you trust your tools, what would you do if you were day trading this and get away from the long-term numbers? I get how it looks and feels. I'm not ignorant to this. I'm trying to challenge you. So you keep your head out of the media and you look at your charts. If you trust your tools, then trust what you see there. Make it prove itself. I didn't say blindly do anything. I just want to bring that up for everybody's attention. It's a different way of thinking things through sometimes, and it keeps you from being the sheep in the market sometimes. It can. Anyway, there's that. If it helps.
How would you address a situation where, like in 2000 and then 2008, we had essentially 100% reset? And if that framework, I guess we should go to a log chart.
Correct.
But if that framework were to play out again,
okay,
you'd be looking at SPY 69.
Uh-huh. And if you took that same framework from the 94-ish lows and went to the highs of the .com, where we stall about midpoint, didn't we? If you were to take a fib from that low in 94 to that high of 2000, both those lows are probably where? Roughly inside of what, a fib?
Probably, yeah.
Mm-hmm. Interesting, isn't it? And you'll see where it bounces in 2012 right off of it. It's stepping up. That's why I bring this up in a more long-term thought process for everybody. This is what I end up having to do with the funds. I have to challenge people to think a little different. And if you trust your tools, then you start to see things a little different, and it keeps you from getting sucked into the world has to come to an end. I don't mean that it can't, guys. I don't want to come across that way. But my job is to try to, if we're going to do the, I'm trying to help y'all and talking to everybody listening to us, is to challenge you to rethink how you look at things. It's also very annoying. Even for me, I annoy myself sometimes. But if I'm going to use tools a certain way, I've got to respect my tools. Then I will let price action confirm this. So this is not some blanket buy or sell. It's let price confirm, still trade your levels if you're a longer term player in the marketplace. But I think you will find value from this as you guys go forward over time. Most of you are shorter term. I get that. So I hope that helps.
Yeah, it's a really interesting case study. And we'll probably, ping pong around in here a little bit, like you said. And I guess you've got one of two ways you can approach it. You can go micro, or you can go really macro in terms of your trades. Mm-hmm. I would be cautious to be accumulating. I mean, you got to have some stones to be accumulating a position right now. I would rather wait for. I stop sharing my screen. I'll share it. I can almost promise you, just market framework analysis. If this was the bottom, and if we were going to be heading on back up, hopefully it is. Yes and amen. There'll be an opportunity that looks like this, and right about there is where I start to take notice, and actually more accurately, probably about right here. Until I see some variant of that,
right,
then I'm very cautious about loading up on longer term positions.
Yep.
So, and trust me, I'm excited. I mean, I'm looking forward to loading up on shares and selling covered calls all the way back up to the top again. That'll be a blast. But I don't know. Go ahead.
Let me just add one thing to it. I mean, even when I look at the monthly bar right now, currently weight shaping up, you just don't see I don't see it, right? But I am just challenging everybody's head, because that's where we get into, okay, we know we're in this zone, this area, as Josh is pointing out, right? So give it time, let it play out, and realize it's a monthly bar, and monthly turns can take a little time, but it's more of an awareness. But you're right. You're going to see certain structures set up. But if you know you're in that zone, is this where we pause for a while? The other piece that is, you know, we're in the zone and you're getting chopped up. Now you understand why we're kind of range bound in here until we get out of here. And again, I look at a lot of 60-minute charts, a lot of dailies and long-term, but I just want to point this out for everybody as we go forward. It's not a, like I said, it's not a blanket buy, blanket sell. You still want to time in if you have a longer term view of things and give the market time. We got time. Just realize where you are on the charts right now.
Awesome.
And Josh, like you were drawing that, breakout, retrace, and then and go. I would mirror that down as well. If we break down below the lows there and retrace back up there and bounce off of that, I'd be looking to get short there too. Yeah, same thing, just on the way down.
Yep, I agree with that.
The great thing is we got time. Just be patient. We got time. These patterns will set up and they'll evolve, like Josh is drawing them out. Just be patient and let the market come to you. Stop chasing it. If you are, just let it develop.
And while the market's just going sideways right now, sell credit spreads.
Yeah.
Cash in your jeans. Say it, Chris.
You and Andy. Andy loves the credit spread strategy. Awesome. Well, I have got to go. I've got some more content to prepare, and I've enjoyed our time together. Next week, we will be at, what is it? It's noon Eastern. We'll be back at noon Eastern. We were at 12:30 today, noon Eastern, and we'll continue on at that pace. That's both for YouTube show and also group coaching. Come bring your questions. If you want to preload the questions, like think about them ahead of time and pop them in as soon as you join. I would much rather talk about what you want to talk about than just invent things to talk about. But as you can see, it's always a good time when I can talk stock marketing things with guys like Chris and Scott. So blessings on each and every one of you. Scott and Chris, I'll let you guys sign off on your own. I'll see you guys next week.
Yep. Thanks, Chris. Thanks, Josh. Thanks, guys. We'll see y'all next week. Later.
Yeah, have a great weekend. We'll see you guys next Thursday. Take care.